Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX. It's about 9 a.m. On May the 7th, and we have a little bit more news in the tariff front to talk about today. Now, it is Fed Day, as we are seeing the Federal Reserve meet today and consider its policy changes. The market's not expecting any change in in its benchmark interest rate. But it will focus on the wording of the policy statement, potential changes in that wording, and particularly on Fed Chair Jerome Powell's comments in the press conference that is 30 minutes after the release of that statement this afternoon to see what they might parse from the words about possible changes. Obviously, they want to know what the Fed thinks in light of the tariff war that we're in and what impact that might have on the economy and on Fed policy overall. Now, as we look at the headlines today, there's a couple of other things to talk about in regards to trade. First of all, the ice has been broken. China and the United States are going to hold high-level trade talks this weekend in Switzerland, it looks like. Both sides essentially saying that they're responding to requests from the other side to talk. That's okay as long as they're talking. Now, U.S. Treasury Secretary Scott Bessent and U.S. Chief Trade Negotiator Jameson Greer are expected to meet with China's economic czar in Switzerland. Now, Bessent told reporters that the initial steps will be to define what they're going to talk about. So these are the first high-level talks that they've had since this tariff war started. We do believe, as I said before, there have been low-level talks about how to have higher-level talks, but those are not talks at the level that would have produced an agreement. Now we have that, but you got to walk before you crawl before you walk and walk before you run. And that's what both sides find themselves right now with tariffs at over 100% both ways. That's essentially a trade embargo, except for those items that have been carved out. China has very quietly carved out items that they need, while the U.S. has carved out electronics to reduce the impacts on their respective economies. So the first step will be to de-escalate tensions. Now, the phase one trade deal during Trump 1.0 took 13 face-to-face meetings between the two sides before they reached a deal. The issues are much more complicated this time around. But China has also replaced the hardline negotiator who handled the negotiations for them in those phase one talks with someone who's considered to be a more moderate negotiator, easier to work with. So we'll see if that has an impact. Nonetheless, I still do not expect to see a quick deal to restore trade between the two countries. And so it's going to take some time. Now, one investment bank estimates that the current trade war could cost China 16 million jobs. It certainly is having an impact on their economy. And the country with the biggest trade surplus, or with the trade surplus, I should say, period, is usually the country that is hurt the most by these trade wars. And China had a big trade surplus with us. So, as such, China not wanting to go into these negotiations from a position of weakness, but a position of strength, or at least giving that appearance, did some major stimulus today. Its central bank lowered its bank reserve requirement for commercial banks by 50 basis points. That's expected to inject about 1 trillion yuan, or about $138 billion into their economy. It also cut its policy rate by 10 basis points and cut mortgage rates by 25 basis points for home buyers. That will widen the gap between U.S. interest rates and Chinese interest rates, adding more downward pressure to the value of the yuan, something that China has really been trying to avoid. Now, President Trump made headlines yesterday when he was having a press conference with Canadian Prime Minister Mark Carney ahead of their talks. And first of all, that press conference showed that they were cordial at best with each other, both sides trying to exert a position of strength, not only before reporters, but before their voters back home, to come across in a position of strength ahead of the actual talks themselves. And so it was tense in the room, certainly so. But President Trump set the tone when he said, we don't have to have signed deals. Now, a lot of reporters and observers took that as meaning we don't have to have actually written deals. And I don't think that's what he said. I've listened to those comments over and over again. What he's basically saying is we don't have to have a deal as much as countries that have trade surpluses against us have to have a deal. And as such, he feels like we are in a position of strength in negotiating. So he says he's going to sit down with his team sometime over the next 2 weeks to work out the numbers. And that's what we're going to present to these countries. They can take it or leave it. And he did say those numbers may be adjusted if necessary. But basically, he feels like we hold the cards in the United States in these negotiations. So a country can accept it or not. If they want access to the US consumer, which is a huge consumer market, then they accept the numbers. If not, then fine. That's kind of the way he's entering into these negotiations. And he said that right in front of Prime Minister Carney for a purpose, I believe, trying to set the tone there. Now, he did back off a little bit on his rhetoric on the USMCA trade agreement, saying it's still in effect. So maybe that softens the tone and gives a little bit of optimism that we can go ahead and reach an agreement with Canada going forward. But obviously, that's where they're standing. Saying they're going to do it at some point over the next 2 weeks gives other countries a chance then. And they've said we're close with India, we're close with Japan, maybe with some other countries as well, like Great Britain or United Kingdom, I should say, that perhaps they want to say, well, we want to get a better deal. We're going to do it before he puts that either or number out there. And so maybe he's trying to push that along as well. But that's kind of a change in strategy that we're seeing outlined in public right now. And so it's something that's going to be interesting to follow going forward. Now, in the commodity news, we're seeing crude oil prices saw a big buying interest over the last couple of days after holding support around that $55 level once again. So we got a double bottom on the charts for now. Will that hold? Well, we're pulling back a little bit today. We have seen sanctions against Russia tightening up supplies, but we're also seeing OPEC. They're increasing output by over 400,000 barrels per day this month, and they're going to do the same next month. And it's believed they're going to continue to do that to punish some of their members with lower prices who have not been complying with the quotas. So that pushes prices lower here, shuts down more U.S. shale oil production, and shifts market share back to OPEC. Now, the positive of that is lower energy prices, once they get actually passed on to the consumer, are a stimulus for the economy, but it's not good for the U.S. energy industry. So that's a problem. So we're pulling back a little bit in energy prices today overall. But the grain and oil seeds positive. A couple of reasons. First of all, fundamentally reacting to the prospect of a possible trade deal with China, at least now that we're thawing out relations a little bit. And the other is we bounced off some modest chart support. So I'm going to call it mostly technical in nature. We'll see. We really need another headline if we're going to be able to sustain this rally, though we simply don't have that right now. So that's it for today. And happy trading, and look forward to coming back to you next time.